Palisade Global Investments is pleased to present the Hard Asset Conference on Jekyll Island, with keynote addresses by Eric Sprott and Dr. Edward Griffin, author of The Creature from Jekyll Island. The event will be sponsored by Triumph Gold Corp, currently drilling its 100% owned Free Gold Mountain project in the Yukon, and by Mexican Gold Corp, just weeks away from publishing its maiden resource on its Las Minas gold project in Veracruz State, Mexico. Come join us at the Jekyll Island Club from October 19th till the 22nd. The event is limited to just 50 participants. Visit palisadeconference.com for more information. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest to the program today is Ali Zamani. He's a former Goldman Sachs portfolio manager, also the chairman of Mexican Gold Corp. Ali, welcome back to the program.
Thanks, Colin. Good to be here.
Really interested to get your take on gold. Gold broke through $1,300 earlier today. It's, of course, Friday, August 18th. I'll also mention that it then broke $1,300 again on the downside, but the critical number that psychologically has been broken now at least. I want to get your take on gold and what you think the future holds for the metal.
Yeah, so, as I spoke last time to you, I kind of laid out the macro for gold, but if you kind of just step back, gold has really been in a bull market since the end of last year. So if you look at it, that was the low, that was the multi-year low. It's been building a higher and higher base since then. Bull markets, the first half of bull markets usually go unnoticed. They're not that exciting. It's a constant grind. We're up, big double digits from the lows at the end of last year, but no one really kind of feels that we're in that big of a bull market. But it's grinding higher. It's kind of making higher highs. It's kind of making higher lows. And if you step back and you look at what the real, people can believe whoever they want, but I look at some of the most successful macro investors. Jeff Gundlach, he runs the biggest bond shop in the world. Ray Dalio, he runs the biggest hedge fund in the world. And George Soros, I think he's has a lifetime of making the right macro bets. They've all kind of come out with this breakout call the last 30 days. So I'm just kind of agreeing with them. I'm not saying anything that these smart people haven't already said. But it certainly looks like that. I think the ground is fertile for it. The charts look good. The base has been made. Anyone that really doesn't want to own it has probably been kind of grinding out of it this year. Bitcoin's making a new high. The stock market's at a new high. Bond yields are making new lows. And I think, when you look at the U.S. administration, it's kind of at the highest dysfunction it's been at all year. I mean, we're sitting in August. They've done nothing. And their ability to do something positive for U.S. growth is less than it was at almost every other day previous to the day of the administration. So, I think we're kind of setting a lot of tinder for a possible fire in gold.
Investors would have to really be paying attention, but the last few days there's been this interesting correlation between gold stocks and the U.S. equities market. I think a lot of gold bugs have the fear that if there's a crash in in the U.S. equities like happened in '08, that gold and gold stocks will get pulled down. And I don't know if you've noticed, but even today during the trading day, as soon as the stock market dropped, gold was up, and as soon as the stock market reverted, gold went back down. And so you have this, absolute correlation. I've noticed it the last few days. I think that's kind of interesting. Wondering if it's something you've paid attention to.
Yeah, I think when you really get into these crises, things behave a little bit different than you would have thought. And then when you're through the crises, things actually kind of behave how you thought they would. So, I think if you get into a big sell-off and people have a lot of margin, people sell what they can. And in a selling environment where your Coca-Cola stock is down 1% and and you get you have a 25% margin reserve requirement on that, and you have some small cap gold stock that has a 100% margin reserve, and you're getting margin calls, they kind of get thrown out. I think if you have gold exposure that's not margined, you can also probably sell that too. But eventually, once kind of the first trade is always into cash. Once people build cash, de-lever, feel more comfortable, then they think about redeploying that cash. And usually when you have a big correction, there's something that's caused that big correction, and that something may kind of lead into the next leg of the trade, which is gold. So I don't think they kind of go one for one. I don't think they'll sell stocks and buy gold. I think they kind of hang around cash for a while. But I think when you kind of get through it, if you have the market go down 10, 20%, and you're 6 months later and it's still down 20%, I think you're going to see gold up 20, 30, 40, 50% higher. But it's not going to be a very smooth ride between those points.
Ali, what's your current thought on the U.S. dollar? If you look at the 5-year chart, you can go back to April of 2015 and May of 2016. The dollar kind of hit that 93 level on the U.S. dollar index, bounced off, rallied up twice, and now we're hovering around that 93 point for the last couple weeks, actually. Do you think that the dollar is going to regain strength here, hold that base, or what happens if it doesn't?
Yeah, the dollar was kind of an easy trade at certain different points. When the U.S. was doing a lot of QE, it was kind of easy to be short the dollar. When the U.S. stopped doing QE and Europe and Japan continued it, it was easy to be long the dollar. Right now, the U.S. is, if you went with the conventional wisdom, the U.S. is tightening and the rest of the world is loose. So therefore, the dollar should increase. But when you kind of, that's kind of the gut reaction, and we had that trade early when the Fed started tightening. Now we're kind of into it. It looks like the Fed's taking their foot, they're taking their foot off. They're taking their foot off the brake a little bit. So they're tightening less quickly. It looks like the Europeans are coming closer to the end of their tightening. So those obvious forces are not at play there. So, I don't have a super strong view. I think, when I said earlier that when equities get wobbly, the trade is into cash. Well, when the world gets wobbly, the trade is into dollars and yen. So if the world gets wobbly, you're going to see yen and dollar appreciate. I think if you kind of have internal political issues in the United States and the rest of the world is kind of fine, I think you see the dollar weakening on that. And I think, the dollar is kind of a referendum on, at this point in the short term, Donald Trump's trade policies and Donald Trump's, confidence in him carrying out his economic agenda. So I think the economic agenda is in jeopardy. Me personally, I don't think he's going to get any of it done. And I think the trade issues are real. And I think he can very easily stumble into a trade war. So, my personal view is the dollar could be under pressure vis-a-vis the euro and the yen, especially with the euro winding down their accommodation kind of as we go into this more dysfunctional administration in the U.S.
Ali, now that we're breaking that critical point of $1,300 gold and you have all these ingredients in place to potentially be a very strong environment for the metal, what do you think the price trajectory looks like for gold? We had the all-time high of just over $1,900. That was 5 years ago now, and it could take quite a while to get back there, no?
It could, but my personal view is it can get there quicker than people think. I think if you look at how it got to its last high, I think that's kind of maybe a template for how it's going to play out this time. I think you had a big grinding phase and people kind of said, okay, well, there's more exciting things like Bitcoin and high-flying tech stocks. So I think people are kind of distracted by this. But, I think we could grind up a few $100s by the end of the year, but we could really be kind of moving fast and hard from the bottom left to the upper right in the new year as kind of people start realizing, hey, gold is moving and it's already at a higher base. That could create some panic buying. And you see panic buying in a lot of places now. So, you're seeing it in blockchain currencies. You're seeing it in a lot of stocks where there's panic buying. So, panic buying is kind of brought on by, a previous kind of history of successful price increases. So I think gold will kind of grind higher, and as it grinds higher, I think people will pay more attention, and I think the rate of price increase will accelerate.
Ali, as I mentioned at the beginning of the interview, you are the chairman of a company called Mexican Gold Corp, a company that Palisade Global is a substantial investor in, a company we're quite keen on, and just released its maiden resource on its Las Minas project. From somebody with your background, I find it very encouraging that you would come from managing several hundred millions of dollars under Goldman Sachs and direct your attention towards these microcap companies, companies that are clearly in the exploration to development stage. I want to get a review of your thoughts on Mexican Gold now that that resource is out.
Yeah, so I guess to kind of start, my reason for getting involved was I view gold as the ultimate insurance policy, and I view, extremely cheap gold as an even better insurance policy. So that's why I got involved. In terms of the resource, we'd like to, we announced last month that we came out with a 1 million ounce resource that's inferred plus indicated at roughly 2 grams. So the grade is good. It's conceptualized in an open pit. We're going to do more drilling. We're going to add more ounces, and over time, and we're going to eventually start infill drilling, which is going to move that grade up as we kind of move to a tighter pit design. So there's a very good maiden resource, 1 million ounces, 2 grams. The number of ounces are going to go up. The number of grams are going to go up. And, if you're kind of playing for a tails risk and you say, gold is $3,000 an ounce and we're going to have 4 million ounces in Mexican gold, you're going to end up with kind of gross metal value of, $10 to $15 billion. And the beauty is it's in Mexico. It's mineable. It's mineable at 2 grams, but that grade is going to go up. It's not in dollars. It's not in the United States. So the price of gold might outpace the inflation in costs. And there's lots of room to expand. Mexican gold has a big property. It's underexplored. So I think, we're in a good spot here.
Ali, let's talk about other metals that you might be interested in right now. You've spoken in the past about the other precious metals, the PGMs, platinum and palladium. Palladium has really performed very well the last few years, and people haven't taken note of that. Platinum, however, has lagged. And then, of course, there's a whole bunch of other metals like zinc and copper that, if you look at a one-year chart, are starting to look quite interesting. So talk to us about any specific commodities and maybe the commodities as a whole.
Yeah, so, it's really interesting that you bring up copper and zinc, because I didn't mention that earlier, but in addition to Bitcoin, copper is very close to making new highs, or making new highs in the short term. Zinc is making new highs of kind of multi-year highs. So a lot of stuff is making new highs with real estate, with the stock market. And this is all really kind of a symptom of all the fiat money that's been created. It goes into these things, which is great. These things produce kind of real productive capacity, but just as easily as they go into these things, they can come out of these things and they can go to safe havens. In terms of what else I like, I think platinum is really just one of the more obvious kind of no-brainers I see out there. Platinum is 7 times more rare than gold. Gold is, I'm extremely bullish on gold, but when I kind of think about how good platinum is relative to gold, I get even more bullish. It's 7 times more rare. Where it's produced is extremely volatile countries, South Africa, Russia. That's most of the production. There's no central bank vaults of platinum. There is central bank vaults of gold. So the naysayers in gold can always say the central banks will sell that, but that's actually not the case. Central banks have been accumulating gold, but there's no kind of bear thesis on platinum. The central banks don't own it. A lot of platinum is mined and consumed in catalytic converters. And I think a lot of the pressure on platinum is this pullback from catalytic converters, mainly because of the diesel scandal in Europe with Volkswagen, but also because of what Tesla is doing in electric and autonomous cars. But I think that's kind of short-sighted. Ultimately, platinum has historically almost always traded north of gold. The last 2 years have been kind of the biggest anomaly in history. So I suspect you're going to get the upside of gold and platinum, but you're also going to get a lot of a cost push pressure. I mean, platinum is not mined profitably at these current prices, and it's not really available to most investors. There's really no way to kind of easily buy a platinum mining stock. There's very few. There's one or two out there. They're not doing very well. So I've actually been getting involved on the junior side in platinum as well, because it's an exciting space.
What kind of involvement on the junior level are you getting in platinum, and where do you look as a speculator to get the leverage on the platinum play?
Yeah, so I look, I used to work at Goldman, and we used to joke that we'd pull out, when Goldman would pull out of a country was always the best time to get in. And when a company like Goldman or a company like Anglo, for example, gets in trouble, the first thing is, okay, let's focus on the core business. Let's not be distracted by the other businesses. Let's sell those, raise capital, and refocus on kind of a bigger operation. And that's, whenever there was a currency crisis in a country or a country would blow up, Goldman would kind of lose money in those countries and pull back to the OECD and then kind of a couple of years later reemerge in those countries. But if you look at the bigger guys like Anglo Platinum, they used to spend a lot of money on projects around the world, and one of them was this deposit in Canada, and the company is called New Age Metals. They spent, roughly $40 million now. The market cap of the company is $6 million. They have $1 million of cash, and they're in Canada. And I suspect they're going to have millions and millions of ounces of platinum in a very safe country like Canada. And, my view on platinum is I think you kind of need $2,000 platinum if there's going to be a diesel engine industry in the world in 20 years. Now, you can take issue with that view, but if there is, it needs to be 2,000 just on that, forgetting about geopolitical risk or investment demand or fiat currency or whatever. So, I'm looking for a deposit that the big guys spent a lot of money, they believed in, they left for strategic, non-kind of resource reasons. There's a lot of data, and it's in a safe country. So, I think it's a good speculation at this point. They did a deal a few months ago that's going to be free trading in about 30 days. So, there may be an opportunity to kind of pick up some shares there. But it's really interesting. I mean, this is a company that in the last cycle, with $2,000 platinum, this would be a several $100 million sale to an Anglo Platinum. So I think that's kind of the upside in something like this.
Excellent. Ali, thank you for coming back on the program. I always appreciate getting your viewpoint on the macro picture and the commodities, and it looks like things are finally going to be going in the right direction second half of this year. Maybe speculators in the commodity space are going to have an exciting 2018. I'm certainly hoping. So thanks for coming on the program, and we'll get you back here soon.
Thanks, Colin. I appreciate it.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?